Peter, thank you for coming on for another video. Today's video is a Q&A video because there are some more extraordinary questions, or perhaps questions that we don't normally cover when it comes to limited companies and property. So I wanted to ask you those today. So first of all, thank you for coming back.
Well, thanks for inviting me again, Justin.
And for anyone just obviously thinking about starting out in property, make sure you get the right advice from the outset. So make sure you contact Peter. But the first question we've got today is, for a refurbishment, can I use an American Express card and then repay, obviously, that off and still claim the refurbishment as an expense to my business?
Okay, well, for this, I think you've got to understand how a company works. A company is separate to you. And it's the company that can pay expenses addressed to the company. Mm-hmm. But if an expense isn't addressed to the company, it's addressed to you, and you expend that money, but it's for the project, it's for the property in the company, then you have to put that expense in as an expense to the company. So if I take this in the American Express card, if that American Express card is in the company's name, it's a corporate American Express card, then you can pay on that American Express card for refurbishment costs. If that Amex card is your card, and you've got it in your name because you want to build up your air miles or whatever, if you buy things for the company on that card, what you have to do with those costs is then submit them as an expense to the company. Yeah. The company reimburses you for those expenses, so it becomes an expense of the company, and you pay off your personal Amex card.
Fine. Okay. Yep. So you're still able to...
You can still claim the expenses.
The tax benefits from that.
Yep, but you have to put them in as an expense claim. What you mustn't do is get the company to pay off your Amex card. Okay. Yeah, you've got to go down the route of expense in, you get repaid, you pay off your own Amex card.
Rather than paying directly off the card. Yeah. Okay, that makes sense, and that's a really interesting topic because I get asked that question a lot. I've been thinking about it myself a lot with the refurbishments I do and that. So I want to make sure I'm utilising the benefits.
So the key route is that you remember the company can only pay expenses directly that are addressed to the company.
Okay, so could you go down the route of getting a corporate American Express
corporate card or a corporate or a debit card in the company's name for the bank account. Yeah, any of those sorts of things.
Okay, brilliant. The next question is: are there any tax advantages to purchasing a property abroad, say in Portugal or France?
Well, certainly when I get asked this question, I'm a UK tax advisor. I can tell you about UK tax. I think, if you're going to go and buy a property in Portugal or France, what you want to do is go and find someone similar to me in Portugal or France that can give you advice in that area. So you want to have advice, what happens when I buy some real estate in Portugal. You need that from an advisor in Portugal. And they may well come back and say, well, you should do that in a UK company. Or they might say, well, you need a Portuguese company to do that. Okay. I'm not in the place to advise you. I think go and find someone like me in Portugal or France.
Okay, fine. And then once they've done that, if it is a UK company, they can talk to you about it.
Yeah, certainly a UK company can hold property in Portugal or France. Yeah. I'm not going to say to you that that's the best thing that could happen. You need to find out from a Portuguese accountant first.
You don't have any Portuguese cousins, do you?
I don't have any Portuguese cousins, unfortunately.
Next question. Fully electric car through a limited company business to travel to property viewings. Can you get the full tax advantage of doing that?
I suppose potentially you could, yeah. I mean, electric cars at the moment, fully electric cars, are quite tax efficient to be bought by companies. And certainly what you'll see in trading companies, you'll see lots of director shareholders buying electric cars. And the reason they do that is you pay £100,000 for an electric car, you've got £100,000 expense in the company, so that can reduce your corporation tax by £19,000. Mm-hmm. It's quite a good investment. And on top of that, at the moment, the benefit in kind on that car is very, very low. You pay tax on £1,000 for the privilege of having a £100,000 car. So it's quite tax efficient. The problem in a buy-to-let company probably is that you haven't got £100,000 worth of profit to get the £100,000 worth of cost for the electric car. Yeah. That's the difficulty. Now, if you are using that car for business purposes, it can go in the company. It's not that easy to do. I suppose there's another thing thinking about that. When you set up your buy-to-let SPV, you've got articles that say this company is simply doing buy-to-let. It's doing buying its own property and letting it out.
Yeah.
And it's set up for lending on that purpose. If a lender then sees that, let's say you've got a lease contract for an electric vehicle in that company, you might well find that your mortgage lenders aren't so keen to lend you on your next buy-to-let. So you need to think carefully about that.
Because they really just want to see rent coming in, expenses going out associated with the property.
Yeah, they don't want to see other debts. You know, there's a lease for 3 years for an electric car in there. That puts a risk that their mortgage won't get repaid.
Okay, interesting. And just going in a bit more on that one. So if I actually then decide to buy that fully electric car through another limited company, which does more trading rather than buy-to-let investments, and I had enough profit there, I go and buy it. You've bought it for business purposes, but can I use that for personal?
Oh, yeah. What you're doing, the company is buying it as a company car.
Yeah.
And you pay a benefit in kind on the privilege of using that company car.
Okay.
The advantage of a fully electric car is that benefit in kind is just on 1% of the manufacturer's purchase price.
Fine.
So if that car costs £100,000, you personally are going to pay tax on £1,000 for the privilege of driving it.
Okay.
So it becomes quite, you know, it might cost you, if you're a higher rate taxpayer, £400, or an additional rate taxpayer, £450 to drive around in a nice new Porsche.
Nice, yeah.
On top of that, the company can pay all of the costs of maintenance, insurance, road fund license. Don't think there is on an electric car, but all those sorts of costs the company can pay. Okay. So that's why you see now, you know, lots of successful company director shareholders driving around in nice new Porsches.
Hopefully we can join them soon. I interrupt this video to bring you a message from today's sponsor. Today's sponsor is the Zeus app. If any of you watching are thinking about getting a property valuation and you want to get it fast, then don't forget to download the Zeus app. All you do is you go on the app, you enter your address, you add your property details, add some photographs, and then you send it off to the estate agents. The agents then review the information, they come back to you with their opinion on the value and also let you know their fees. And the Zeus app itself has this really neat graph which allows you to compare all of the agents and then make a clear decision which estate agent you'd like to use. Now, if you'd like more information or if you'd like to download the Zeus app, use the email address below or use the link below and download it today. In terms of, as the next question, in terms of corporation tax, is corporation tax calculated before or after the £2,000 tax-free dividend to shareholders?
Right. So the dividend is nothing to do with corporation tax. So to calculate your corporation tax, that's going to be your rental income, less any rental expenses you've got on that property, less any insurance, letting agents fees, those sorts of costs.
Yep.
Accountancy fees, put that one in. That's going to give you, and also your mortgage interest.
Okay.
That's going to give you your profit, and that's going to be the figure that you can pay corporation tax on.
Yep.
Currently, that profit, you're going to pay corporation tax at 19%. After you've paid that tax, then you're free to distribute that tax to the shareholders, and that's where the dividend comes in. So you've paid the corporation tax on the whole lot, then you can make a payment to the shareholders.
With the remaining profit.
Yeah. If those dividends are £2,000
yeah.
to a shareholder, then if that shareholder hasn't got any other dividends in the UK, they don't have to pay any more tax on that dividend.
Yeah.
If the dividend's bigger than £2,000, or they've already got £2,000 worth of dividend income from somewhere else, then they'll have to pay tax at currently 7.5% if they're a basic rate taxpayer, 32.5% if they're a higher rate taxpayer, or even 38.1% if they earn over 150,000.
Well, shoots up, doesn't it?
Yeah.
Okay. No, that's really useful. And again, I think that'll be very valuable for a lot of people. One of the ones that we've come across more lately, or depending what people's structure is to their limited company, what is a family investment company?
Right, yeah, we are seeing a few more of these now, Justin. A family investment company is just a variation on the buy-to-let SPV. Where it really becomes useful is if the people making the investment are generally older. Can I say that?
Yeah.
If you're older, if you're over 60 like me, and you're now you're retired and you're making investments into property, and most likely you're not going to want to return. You're not going to want the money back from that. You just put in your money somewhere instead of in cash, and as that happens, you're thinking less about, how much I'm going to build this portfolio for my future, but more about how am I going to take my money and put it somewhere where I get a return. And most likely that return is going to go to my children. And so you're then thinking, well, how could I get that money to my children without too much tax? And that's where a family investment company comes in. It's really designed with inheritance tax rather than income taxes in mind. So if you've got a family investment company, you might well be thinking, well, I'm going to build this portfolio up, and I would quite like to, well, I wouldn't like to die, but I quite like, when I die, I would quite like not to pay 40% inheritance tax. Now that can be done with a family investment company where different generations of your family own different sorts of shares in the company. That's where it gets done. So I would say family investment companies, have a think about them. If you're over 60 and you never want to spend the money that you're going to invest in property, but you would quite like to make sure your children get a little bit more when you die, then maybe have a look at it in family investment company.
Yeah, really interesting. Not something I knew about, not something I can say I'm looking at yet, but really good to know that there's different ways.
Yeah, I think, for you, don't think about a family investment company at your age, because inheritance tax is so far off. The tax rules will change. Yeah. And if you set something up for, let's hope, 70 years' time, it's almost inevitably not going to work. You'll pay a lawyer or someone to set the whole thing up, and most likely you'll never get a return out of it because inheritance tax rules will change.
Okay, good. And then another one kind of linked to the structures of businesses and how we structure limited companies. What is the benefit of a holding company?
Okay, so we do see this come up a few times. A holding company, what you end up with a holding company when you've got a buy-to-let SPV, often what you've got in the first place, you've got your own company, you're running, I don't know, a plumbing business. You're the shareholder director of that, and you're earning money out of that plumbing business, and you're earning excess money, and you want to go and invest that in buy-to-let. You could just go and set up a buy-to-let SPV and lend some money from your trading company to your buy-to-let SPV. But if you do that, you'll always have a loan between the two businesses. Mm-hmm. Yep. As an alternative to that, you could take the money out of the trading company, pay all those personal taxes and lend it back to the buy-to-let SPV. But there you've had to pay that 32% tax on the dividend to do it. So it's expensive. Yeah. And so there's problems with both those routes. The first route, just lending it. If you stop your trading company, you've still got a loan. You can't get rid of the trading company.
So you've got to keep it open.
You've got to keep it open. If your trading company gets into trouble financially, potentially your creditors could get that loan back from your buy-to-let SPV. So it's not that safer route, especially if the loans start to get to be bigger and bigger. And so one route around that works is to have your trading company, and then rather than you own shares in the trading company, you put a holding company above the trading company. So now the holding company owns the shares in the trading company, and you own shares in the holding company. You then set up another subsidiary company, a buy-to-let SPV, yes, owned by the holding company. Then the trading company can pay a dividend to its shareholders, which is the holding company. That's an expense. There's no loans involved in that. Okay. The holding company gets the money. It can either lend it back to the buy-to-let SPV, most likely lend it back to the buy-to-let SPV, so that the buy-to-let SPV has got the money, and the buy-to-let SPV can go off and buy the properties. Under that route, there is no loan between the trading company and the buy-to-let SPV. And so you don't have all those worries if your plumbing business goes wrong and you get sued for causing a flood somewhere. You haven't got to worry for your buy-to-let portfolio. It's nice and safe.
Fine. And then also there was benefits to if it was a plumbing business and you were generating good profits and you wanted to exit out of that and sell it on to someone. There's benefits.
Crikey, you're a tax expert here, Justin. Yeah, no. Absolutely. Yeah, if you are looking at selling your plumbing business, yeah, and it's held by your holding company, if you were selling it and it was held by you, you'd sell it, you'd make some money on the shares, and you'd most likely pay 10% tax on the first £1 million, 20% tax on after that. If that trading company is sold and it's owned by the holding company, there is no tax when it gets sold. So it gets sold for that same £1 million. The holding company gets the whole $1 million. There will be tax if you want the money, If you want to take it out of the holding company, then you'll pay that tax. But if you were just putting the money into the holding company and then lending it back to the SPV, by having the holding company in place, you sold your company for £1 million, you could put £1 million into your buy-to-let SPV.
Yeah.
Whereas if you sold those shares, you'd lose £100,000 in tax, and you could put £900,000 into your SPV.
Yeah.
So there is another little advantage there. It's very specific. You know,
Yeah.
you've got to sell your trading company to get to it.
Yeah.
But sometimes, if you can see your portfolio is going to be is going to grow, and you can see you've got a trading business and you're planning for the future for some of these things, a holding company with a trading subsidiary and a buy-to-let SPV is quite a good route for you.
Yeah, yeah, and many tax advantages to it. So, and
there are more costs to that. Remember, you've got 3 companies involved.
You've got to then run.
You've got to think about those.
Yeah. Well, for anyone that might apply to, obviously think about that. Maybe have a chat with you about it. But that's all the questions for today. So thank you very, very much for coming back on. And anyone watching, if you are about to open a limited company, if you're about to invest in property, don't forget to reach out to Peter. Peter, thanks once again. I'll see you soon.
No problem.